Hi everyone, welcome to Decode Australia. Today is Wednesday, the 9th of December 2020. My name is Tamer.
My name is Yvonne.
And we're going to be starting with the Aussie USD.
The Australian dollar slid down against the US dollar on Wednesday, decreasing the price of the Aussie US pair to less than 75 cents ahead of the release of US Michigan Consumer Price Sentiment Index news.
Now currently the Aussie US is trading around the 74.15. Once again, we're looking at the charts. We can see the following support levels. Support 1 is 73.39, which is the lower trend line arm. Second support is at 73.26, but 23.6 Fibonacci retracement level. Finally, the third support is at 73, even a psychological number.
On the upside, the price of the Aussie US pair may hit some critical resistance levels. The first resistance will be 0.7453, which is the major horizontal resistance. And the second resistance will be 0.7483, which is the high of July 9th, 2018. And the third resistance will be 75 even, which is the psychological number.
So the news we need to keep an eye on is the US Michigan Consumer Sentiment Index news. The University of Michigan US plans to release numbers concerning the US Michigan Consumer Sentiment Index news on Friday, December 11th. And according to economists' view, the US Michigan Consumer Price Index reached a reading of 76.5 in December as compared to the reading of 76.9 in the previous month.
The US Michigan Consumer Sentiment Index reflects consumers' confidence levels in the country's economy. The US Michigan Consumer Price Index is an important economic indicator as it indicates whether or not the consumers are willing to spend money in the coming days. Generally speaking, the high reading is seen as positive for the US dollar, suggesting a bearish market for the Aussie US pair ahead and vice versa.
Now, in conclusion, considering the overall price movement of this pair in the recent few days, selling the Aussie US pair around the current levels might be a sensible trading move in the short to medium term trading. And now let's move on to the Kiwi US dollar.
The New Zealand dollar rose against the US dollar on Wednesday, increasing the price of the Kiwi US pair to more than 70 even, ahead of the release of US Consumer Price Index exclude food and energy news.
Now, the New Zealand USD pair is currently strengthening around the 70.45 level. Once again, we're looking at the charts. We can see the following resistance levels. At resistance 1, we have the 71.02, which is a major horizontal resistance level. Resistance 2 is at 71.88, which is the low of March 29, 2018. And finally, the third resistance is at 72 even, a psychological number.
And on the downside, the price of the Kiwi US pair may find some critical support levels in the listed price. The first support level will be 0.6958, which is the 23.6% Fibonacci level support. And the second support will be 69 even, which is the psychological number. And the third support will be 0.6868, which is the major horizontal support.
Okay, so the news we need to look out for is the US Consumer Price Index excluding food and energy yearly news. So the US Department of Labor Statistics anticipates releasing stats for the US CPI excluding food and energy this Thursday, December the 10th, 2020. And according to economists' consensus, the US CPI excluding food and energy news registered a reading of 1.8% in November this year as compared to 1.6% in November the previous year.
The stats for the US Consumer Price Index exclude food and energy reflects the movement of the prices of different goods and services selected from representative shopping basket of the retail sector on a sampling basis. It is to be noted that the numbers for the US CPI exclude food and energy do not include the prices of volatile items such as food and energy to calculate unbiased figures. Generally speaking, higher reading is considered positive for the US dollar but suggests a bearish market for the Kiwi US pair ahead and vice versa.
Okay, once again, in conclusion, given the economic outlook of this pair over the past few days, buying the pair around the current levels might yield some good trading in short to medium term. As always, when trading, trade with your head, not your heart. Only trade what you can afford to lose, and always apply strict money and risk management techniques.
Yes, and don't forget to subscribe to our YouTube channel, like our Facebook page and our Instagram at Forex Decoded. If you like our videos, don't forget to hit the like button. See you next time.
Bye for now.
Bye.